Bitcoin saw an explosive breakout toward the top side, reaching as high as 27.3k. Since then, Bitcoin has corrected quite aggressively back towards 26.8k. In today's video, we're going to be discussing what this price action means, what the charts are telling us, and how the media manipulates your decisions. Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be discussing the current price action, what is happening on the charts, where Bitcoin is going next, and of course, how the media machine is used to manipulate your decision making in the trading game, and how you can understand it and potentially use it to your advantage. Alongside all of that, we're going to get into everything such as the market data and of course the broader market. So without further ado, go ahead and smash that like button, hit the comment button and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If you're interested in that kind of content, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything in between. If you're interested in joining our VIP channel, we post trading signals with exact entries, exact targets, exact stop losses, trade justification, and so much more. Not only will you get access to a VIP group, you'll get access to 5 group chats, our general chat, our trading chat and education chat, our news chat, our video chat, our trade setup chat, and our help chat. If you're interested in joining all of that, go ahead and contact me via the pinned comment in the free channel to go ahead and get access. You can find our entire trading track record right over here as well. Let's go ahead, guys, and jump into the video. And like I said, today is going to be an interesting one because we have a lot to talk about. And this chart is looking pretty interesting, and we're going to come back and get into it in just a moment. But we'll start on the market data and, of course, the broader market. So how are we looking currently for September? We have seen a pretty explosive move toward the upside upon Bitcoin breaking through that 26.8k trigger. We saw a pretty large rally, guys, all the way up to reach that target we talked about, which was 27.34. We saw that level wicked, we saw the liquidity trap set, and we saw the correction from that level. If we take a look at that market data, we can see in the last 24 hours, we've had a pretty big surge in volume. We saw a 109% increase in volume, bringing us to 72 billion in total. The 24-hour liquidations have gone up 85% as expected when volatility comes into the market, sitting at 89 million. September is currently up 3.07% with 11 days remaining in the month. And again, kind of defying odds over here, as September is historically quite a red month. In fact, there was a 76% chance that September was in fact going to be red. So it's really going ahead and defying the odds. Moving on to our volatility index, we can see the 30 and 60-day period really haven't changed too much. If we take a look at the 30, we can see it did correct toward the downside slightly, and the 60 has been more or less plateauing for the last few days. Moving over to our liquidations, taking a look at the liquidations, the majority of liquidations actually came from short positions at 89 million in total, with 28 million in those long positions. Let's go ahead and jump into the broader market. So the DXY is still in this rising channel formation. Again, retesting this upper level of resistance, this huge liquidity zone at 105 to 106, a huge area of historical significance and resistance. Again, this is a close to 1 year long resistance. We're sitting just under 300 days. So we're looking at about 9-month long resistance over here. A break above this level would be incredibly bullish for the dollar and result in a pretty large move toward the upside. We could potentially see a move to around 107 as a first target, 108, and even to this 109 to 110 zone. This would be very, very bearish for asset prices. If the DXY corrects from here, it is going to be relatively bullish for asset prices. Okay, if the US dollar drops, okay, this will be relatively bullish. Now again, if we take a look at the DXY over here, we are in a rising channel formation. We are in a rising channel formation at resistance, and therefore we do expect a short-term correction from here. However, the uptrend is still intact until the uptrend is lost, and the uptrend will be lost when the DXY breaks below this uptrending diagonal black line over here. This is representing the overall trajectory of price action over the last 2 months. If we break below that uptrending support line, that is when the price will enter a short-term downtrend and could correct. Now, it is very, very important to note the direction of the DXY is heavily linked and determined to economic news such as interest rates and even inflation. We do have an interest rate decision coming out very soon. This is going to be on the 21st, so in like two and a bit days time, we have the interest rate decision, and we can see, as per the data, there is a 99% probability that we are going to see no hike. We're going to see a pause for interest rates. Here is the thing, guys. Rising inflation is bullish for asset prices, provided there is no connotation attached to that rising inflation that interest rates are going to go up as well. I'll say it again. Rising inflation results in asset prices increasing, provided there is no expectation in the future that that will lead to a rise in interest rates. As you can see, there is no expectation this is going to lead to a rise in interest rates, and that is why the recent inflation data, even though inflation actually came out higher, didn't result in a negative reaction in the market, as inflation rising isn't what causes asset prices to drop. It's interest rates rising that causes asset prices to drop. So we are looking at this moving forward if inflation continues to rise, right? If we see inflation rising month after month for consecutive months, that is when we start to say, okay, inflation is rising again. We're going to see this delayed impact or this delayed rise in interest rates. And that is what could increase the perceived systematic risk and drop the asset prices. Remember, guys, the government doesn't care about getting inflation under control, okay? They care about giving the illusion that they care about that, okay? If they really cared about getting inflation under control, they wouldn't wait so long to get the ball in motion. The truth is, governments can fund economic growth through inflation, and they make a whole lot more money in taxes when inflation goes up, as there's more money being transacted, more spending, more taxes, more income for the government. Do not listen to it. Be aware of it, but don't listen to it, all right? Watch what they do, not what they say. Let's go ahead, guys, and jump into the stock market. So S&P 500, really not too much happening here. We're still creating a potential lower high here. Again, if we do correct lower, we still expect that move toward the downside. For the bulls to take control, we need to get above 4,600. The same goes for the Dow Jones, guys, here. We do need to break above this local high point to continue upwards. Until then, we are potentially running the risk of correcting lower. Let's go ahead and jump into Bitcoin now. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Let's go ahead, guys, and jump into our analysis. So Bitcoin saw a significant break toward the upside. We obviously tapped that upside liquidity over here, reaching that high point. Again, if you're following us on Twitter, you would have seen we posted this one actually on Twitter yesterday, which was in this chart right over here. We'll go up and show you really quickly. Right over here, we saw this upside swing towards that level of liquidity, so perfectly tapped that and rejected from there. Currently, Bitcoin is sitting underneath that major 26.8k resistance. So we are in this channel once again. However, if we zoom down to an incredibly small time frame, we can see we are trying to develop some degree of a base of support at around about this level, right? We have this level of support over here that we are trying to develop. If we look at the higher time frame again, and we say, well, where does Bitcoin theoretically need to go to swing towards these low points? Everything remains as per yesterday's analysis, guys. So we do lose this 26.3 to 26.2k level. We will be sweeping these lows toward the downside. As we approach and break below the POC, we enter a more aggressively bearish trend, right? While we remain above this 28.6, we are technically bullish. While we remain above the 26.2, we are technically bullish. We've just seen a short-term correction towards support, okay? If we take a look at the higher time frame, and we say, well, what is actually happening here on the higher time frame? What does this move mean? What has it actually changed? In essence, it hasn't changed anything, right? If we take a look at the high time frame, as I've been saying this entire time, 25.2 to 24.4 is the major horizontal support. To expect any sort of continuation lower, although it's plausible, for it to be a reality, we have to lose 24.4 to 25.2 first. So this is a major bullish support. You can see a major bullish support. However, just because we are above a major support, it doesn't necessarily mean we are bullish right now on the short term or on the weekly. If we take a look at the weekly trend is defined by this downtrending resistance. We are currently underneath this level, and therefore we are in a weekly downtrend. We can be in a daily uptrend, which we are, but we are currently in a weekly downtrend. So right now, Bitcoin could theoretically go as high as this downtrending diagonal trend line. If it fails to break above there, we will remain weekly bearish. And while we remain weekly bearish, there is always a chance that we can come back down and lose 24.4. However, it is unlikely and it shouldn't be expected until it does occur. If we do break above this downtrending diagonal resistance, that is when we enter this weekly bullish trend again, targeting again a range up to around 32,000, potentially 30,000 to 32,000. So definitely watch out for that once more. Let's go back to the small time frame chart, guys, and discuss what is happening from a technical perspective. So actually, we'll start on this chart and do that, and then we'll go back down to the smaller time frame. So we'll go ahead and bring up our relative strength index and our CVD. We can see two things. First and foremost, when we're taking a look at breakouts, we have to see, well, according to my 3-point rule, I look for a structural break, I look for a shift in momentum, and I look for a shift in relative volume, so CVD. If we take a look at our RSI over here, we can draw our RSI trend line in. We have that breakout on the RSI. If we take a look at that CVD, we're looking for a clear of this high point. We do not have that yet. If we look at the structural formation as downtrending diagonal resistance, we do not have that yet. So we have actually one out of the 3 required points of validation to validate a break or continuation upwards as of right now. So as of right now, we do not have anything suggesting that we are going to be breaking through this resistance with any degree of confidence. That doesn't mean we won't go up and retest it, and that doesn't mean if we do retest it, these will change. However, it does go ahead and create a scope of which you can go ahead and set your expectations or boundaries or expectations are probably the best word for that, moving forward in the future. Let's go back to a small time frame now and do exactly the same thing. So the RSI and the CVD on the smaller time frame and discuss the next move for Bitcoin. So as we said just a few moments ago, if we do see a correction here underneath this local area of support, we'll go to a 15-minute chart, we will be able to see a continuation lower, and I'd be expecting a continuation lower to retest this 26.3 to 26.2 range, okay? Until then, if we break it down to an incredibly small time frame, we can see we do have an attempt, and I do mean an attempt, it's quite a weak attempt, an attempt by the bulls to regain some of this strength. However, it doesn't look like they're doing a great job. So we do have, again, volatility starting to fall, right? We're seeing falling volatility, which is represented by compression of the 50 EMA in the price action. We're seeing momentum attempt to rise, however, it is still overall in this downtrend, and CVD is still falling toward the downside. So we do have this attempt by the bulls to kind of suppress this bearish strength, build up some bullish strength, and continue upwards. However, it doesn't look like they're doing a fantastic job of that. It does look like it is starting to exhaust, and it could potentially continue lower. If we do see a continuation lower on a small time frame, we are looking to fill these gaps, okay? You're filling these gaps on the CVD, so you're looking at 26,600, 26,500, 26,550 as a first target, and then you're expecting lower if that does continue. If we happen to continue upwards, we are very unlikely to continue upwards until we clear these local high points. So clearing this local high point at 26.8 or 26.900 rounded up $2, we can expect a continuation back upwards to retest that 27k, potentially even 27.1k resistance. So until then, it isn't looking fantastic. And just like we always do, guys, just like we always say with ranges, we have shifts in strength in ranges that are very, very apparent and very clear. All you need to do is zoom out and look at them, right? If we flip this chart and take a look at what is happening over here, what does this really suggest? So we'll go ahead and remove everything and show you one more time. What does this really suggest over here? Okay, it looks like we had a bottom side liquidity grab. We have reclaimed this lower area of support, and we are sitting above the support, and therefore you should expect a continuation upwards as support is support until it is not, until it is broken. So again, we flip the narratives as we go ahead and flip these channels. While we remain above this level or below this level here, we are bullish. All right, we expect a continuation. I will flip the chart again. While we remain below this area, we are bearish. We expect a continuation downwards. That bearish strength is developing, okay, and it strengthens as it continues downwards, just as the bullish strength develops and strengthens as it continues upwards. If you want to do one more thing and take a look at this chart and do exactly the same thing on this chart, you can go ahead and do so, drawing in that horizontal base of support at 25.2 to 24.4. Go ahead and flip that chart. You can now see just how significant this level of support truly is. Again, inverting the chart sometimes is fantastic at checking your own biases. If you invert the chart and all of a sudden you think the price is going to do opposite to what you expected when the chart was not inverted, you generally have a bias. You have an outcome bias, you have a bias based on structure, or of course based on direction. So when you flip the chart and your data remains the same, your expectations remain the same, generally that is when you know you do not have any subconscious biases. So right now, for a continuation upwards, of course, we need to break above that neckline, guys. If we look at this chart, and then we go look at the DXY, we have a very similar kind of structure going on, right? We have this massive, massive correction, and I'm going to show you one quickly. There's massive, massive correction, retesting this major, major neckline. We have a very similar style of pattern going over here. Massive correction, retesting neckline, retesting neckline. Again, if we break through this neckline, that is when we expect that continuation upward to occur, which is actually going to be downward. And while we remain above or below here, we expect that bounce toward the downside. Okay, guys, I'm going to wrap up the video. I hope you enjoyed today's video. I hope you learned something, and I'll catch you guys in the next one. Cheers.